Hey there, fellow investors. Welcome back to the channel. Today we're diving into a super important topic that can make a big difference in your investment strategy. Treasury bills, T-bills versus notes. What's the difference? Which one should you choose? Well, buckle up because we're about to break it all down in the next 60 minutes. Now, I know what you're thinking. Notes? Bills? Sounds like we're talking about my outstanding electric bill, but don't worry, no late fees involved in this discussion. We're talking about government debt here, folks. And trust me, it's a lot more exciting than your utility bill. But before we dive in, do me a favor. Hit that like button, subscribe to the channel if you haven't already, and share this video with someone who's curious about T-bills, notes, or just needs a little more investment knowledge in their life. Let's get started. All right, let's kick things off with Treasury bills, or T-bills as we like to call them. These are short-term government securities issued by the U.S. Treasury Department. Essentially, T-bills are a way for the government to raise money for short-term funding needs. And as an investor, when you buy a T-bill, you're essentially lending money to the U.S. government. Yes, the same government that prints your money. Weird, right? It's kind of like lending your uncle $50, and he promises to pay you back in a few months. But instead of your uncle, we're talking about the U.S. government, and I'd say their chances of paying you back are pretty solid. T-bills are considered one of the safest investments out there, and why is that? Because they are backed by the full faith and credit of the U.S. government. Yes, the same government that can print money at will. So if you're looking for low-risk and super safe investments, T-bills are pretty much your best friend. Now, T-bills are sold in auction formats with maturities ranging from 4 weeks to 52 weeks. That's 1 year. They are sold at a discount to their face value, meaning you buy them for less than they're worth. And when they mature, you get the full face value back. The difference between the purchase price and the maturity value is your interest income. Let's say you buy a $1,000 T-bill for $980. After a year, the government pays you the full $1,000. The $20 difference is your return. Not a huge payout, but the peace of mind that comes with this level of safety is priceless. So if you're looking for zero drama, zero risk, and just want your cash back with a little bit of interest, T-bills are a solid choice. All right, now let's talk about Treasury notes, or just notes. Unlike T-bills, which are short-term, notes are medium-term government debt securities. While T-bills mature in a year or less, notes have maturities of 2, 3, 5, 7, or 10 years, so you can park your cash in a note for a little longer and earn some interest over time. Think of T-bills as the quickie date, and notes as the serious relationship that lasts for a couple of years. You know, like the commitment level goes up a notch, but hey, don't worry, these are still government-backed, so your chances of losing your investment are still super low. It's just a bit more of a long-term fling than a one-night stand. Now, when you buy a Treasury note, you're buying it for its face value, just like T-bills, but the main difference is that Treasury notes pay interest every 6 months. So if you like getting paid regularly, this is the option for you. The interest you earn from notes is paid out semi-annually, and that interest is taxed at the federal level. Sorry, you can't escape the IRS. But still, it's a solid, safe income stream if you're looking for a more consistent return than what T-bills offer. Let's say you buy a 5-year Treasury note for $1,000 with a 2% interest rate. Every 6 months you get paid $10 in interest, and after 5 years, you'll get the $1,000 principal back. Simple, right? It's like buying a note to your own financial happy place. You get paid regularly and your money stays safe. Just don't expect to be living on a yacht from these returns anytime soon. All right, now that we know what T-bills and notes are, let's break down the key differences. It's time for the ultimate showdown. Grab your popcorn, folks. Round 1 term length. T-bills have maturities ranging from 4 weeks to 52 weeks. On the other hand, Treasury notes have maturities of 2 years, 3 years, 5 years, 7 years, and 10 years. T-bills are like the speed dating round, and notes are more like the slow dance, you know, a little more time to get to know each other. Round 2, interest payments. T-bills don't have regular interest payments. Instead, you earn interest in the form of the difference between the price you pay and the face value. Treasury notes, however, provide semi-annual interest payments, meaning you get regular cash flow. Notes are like the dividend-paying stocks of the government world. They pay you regularly. And who doesn't love a little extra cash in the mailbox, right? Round 3, tax treatment, T-bills. The interest is subject to federal tax but exempt from state and local taxes. Treasury Notes, same deal. Interest is subject to federal tax but exempt from state and local taxes. So the tax treatment is pretty much the same on both. Uncle Sam gets his cut, but the states can't touch this. A win for us, right? Round 4, risk level, T-bills. These are the short-term champions of the low-risk world. Very little chance of losing your money. Treasury Notes. A little more time in the game, but still extremely low risk as they're backed by the US government. It's like comparing two superheroes. T-bills are like the Flash, fast and quick, and notes are like Superman, a little slower but still pretty invincible. So, which one should you go for? T-bills or Treasury Notes? Well, it really depends on your investment goals. If you're looking for a safe short-term investment to park your cash for a few months and you don't mind not getting interest payments along the way, T-bills are a great choice. But if you're looking for a longer-term option where you can get regular interest payments, then Treasury Notes might be the way to go. It's like asking whether you want a quick espresso shot, T-bills, or a nice steady cup of coffee, notes. Both have their perks, but it's all about how long you want to stay awake. Invested. All right, we've broken it all down, and I hope you now understand the key differences between T-bills and Treasury Notes. But before you go, don't forget to share this video and leave a comment with your thoughts. Are you Team T-bill or Team Treasury Note? Or are you still trying to figure it out? Hey, I want to know what you think. And if you found this video helpful, make sure you share it with someone who needs this info. Stay smart, stay savvy, and I'll see you in the next one. Take care, everyone.